If you have been following Bitcoin, you might have noticed some pretty big price swing lately. Let's dive into this together and understand what's going on. First things first, we know Bitcoin's price can be a bit like a roller coaster. Sometimes it's shooting up, sometimes it's diving down, and I bet you have also seen these wild rides. But why does it go down? There are a few key reasons we should look at. One major factor is market sentiment. Think of it like this. If everyone at a party is excited and happy, the energy is contagious. But if people start feeling nervous or worried, the energy spreads too. In the world of Bitcoin, if investors are feeling confident, they buy more and the price goes up. But if they start feeling uncertain or scared, they sell and the price goes down. News and media play a huge role in this. For example, if there's a news story about an approaching recession, or a country banning Bitcoin, or a major company deciding not to accept it anymore, people might panic and sell their Bitcoin. It's like a wave of fear that sweeps through the market. Not long ago, when Bitcoin ETFs were about to launch in the US, the market was full of positive sentiments. I personally have serious doubt about ETFs being a fundamental factor that supports the long-term boost of Bitcoin price. To me, those ETFs are just another tool for institutions and investors to play the money game, in a setting that's more well-regulated and where their operations have already been well-established. Just like we go to a familiar grocery shop, where we know by heart we'll find what products from which word. While when we visit a new shop, we have to spend time to look around, and time is money. A lot of money to those professional investors when they can make millions in a thousandth of a second. If we treat Bitcoin like a stock, with ETFs tied to it, if Bitcoin continues to exist, people keep trading on both Bitcoin and its ETFs, profiting on both sides, they will be happy. What if one day Bitcoin loses its popularity? I believe you also know there are countless number of stocks got delisted over the years, right? It won't be a big deal to delist one more. Another reason for Bitcoin's price drop could be regulatory changes. Governments around the world are still figuring out how to handle cryptocurrencies. I just posted another video not long ago on this topic. When there's news about stricter regulations or potential crackdowns, it can make investors nervous. They might sell off their Bitcoin to avoid any potential issues, causing the price to drop. Then there's the good old supply and demand. But it's not simply that. I'll share with you what I think would cause a drop in demand in a minute. Bitcoin has a limited supply. We all know it's only 21 million that will ever exist. If the demand for Bitcoin decreases and people start selling, the price will naturally go down. It's like selling oranges at a market. If there are too many oranges and not enough buyers, the price of oranges will drop. Now it's time to get to what would cause such a drop in demand. I see three major possibilities. 1. Security. We understand cryptography is one of the cores of blockchain. If sometime down the line, someone is able to disrupt the Bitcoin network, maybe by supercomputer or a quantum computer, even a small interruption may cause a huge loss of trust to Bitcoin, leading to the diving of demand. The second one is alternatives. So far, none of the altcoins, no matter how close the nature of that altcoin is compared to Bitcoin from a store or value perspective, has picked up the same popularity or attracted similar level of investments. We can certainly contribute that to the first mover advantage, media attention, or that pizza that costs one Bitcoin story. However, what if people or whales want to make it simple for this transition period before the next thing comes out? Say just a hypothesis, a United Nations coin or World Bank coin appears, where the supply of this coin is limited same as Bitcoin, and the initial split of the share is based on the GDP net foreign debt of each nation, and each nation will run an equal amount of nodes to keep the network running. if they start to offer this coin to the public? Would you prefer to hold Bitcoin or this UN coin? There would probably be 4 groups of people, right? One group only trusts Bitcoin, the other group only trusts UN coin, and the third group trusts none of those coins, while the fourth group would like to own a bit of both and see what happens. For the first 3 groups, they likely won't impact Bitcoin demand because the die-hard fans will maintain their diamond hands as they do today to hodl Bitcoin. And those that don't believe in Bitcoin or any coins will not touch those today or in future. It's the final group that's going to bring a dent to the demand of Bitcoin. Some of them are likely owning some Bitcoin today, and if and when they rebalance their portfolios, shifting their funds to the new alternative, the demand for Bitcoin will certainly come down. The final one, and also the most lethal one, is the miners. When time goes on and the remaining Bitcoin halving happens to a point where miners have to start looking into whether it's still profitable to continue operation, if they lose interest to the extent that the Bitcoin network gets impacted, there will be a major crisis not only impacting the demand of Bitcoin, but possibly killing it. But we're still almost 100 years away from the last block of Bitcoin being mined. That 100 years is assuming we don't have some monster chips or machines appearing in the market in the next few years that can exponentially speed up the Bitcoin mining process. Now, let's talk about what indicates a Bitcoin bear market. A bear market is when prices are falling, and there's a general feeling of pessimism. It's like winter in the financial world, cold and a bit gloomy. One key indicator of a bear market is sustained price decline. If Bitcoin's price keeps dropping over the weeks or months, it's a sign that we're in a bear market. It's like watching the leaves keeps falling and falling and falling off the trees in autumn. We know winter is coming. Another indicator is lower trading volume. Trading volume is like the heartbeat of the market. Fewer people are buying and selling Bitcoin. It suggests that interest and confidence are waning. It's like a quiet street that used to be bustling with activity. Sentiment indicators are also important. These are tools that measure how investors are feeling. For example, the Fear and Greed Index looks at factors like volatility, trading volume, and social media activity to gauge whether the market is feeling fearful or greedy. In a bear market, this index will show a lot of fear. We also need to look at technical indicators. One common tool is the moving average. If the short-term moving average, like the 50-day, falls below the long-term moving average, the 200 days, it's called a death cross, and it often signals a bear market. Think of it like a storm cloud crossing the sky. It tells us bad weather is coming. Another technical indicator is the relative strength index. The RSI measures whether an asset is overbought or oversold. In a bear market, the RSI will often show that Bitcoin is oversold, meaning people are selling it off rapidly. Lastly, external economic factors can play a role. If there's a broader economic downturn, people may sell off riskier assets like Bitcoin to hold onto cash. It's like tightening our belts during tough times. We cut back on non-essentials. As for whales, they may just cash out first and reinvest into whatever biggest bargain they see in the market at that point in time. Remember, the world of Bitcoin can be volatile, but it's also full of potential. Understanding these factors can help you navigate the ups and downs with more confidence. If you're feeling unsure, it's always a good idea to do your own research and maybe even talk to a financial advisor. Thanks for joining me on this journey to understand Bitcoin's price movements and bear markets. If you found this helpful, give it a thumbs up and don't forget to subscribe for more insights. Let's keep learning and growing together at Asset Tech.